Welcome to Alpha Recap. I'm Morgan. Today we walk through a pretty eventful session, and we have Kate here to unpack it all. As always, if you have questions, you can reach us at stockalpha.ai.
Thanks for having me. It was a day where geopolitics and tech headlines really wrestled for control of the tape.
Markets closed mixed, but it felt like a rotation day. Energy and capital-intensive tech got the bid, while banks and parts of healthcare lagged. So, what really stands out here is the energy move.
Yeah, absolutely. The headline there was a supply-driven shock from the Middle East and an LNG disruption out of Qatar that tightened the immediate picture.
And the number that really caught our eye? Diesel spiked about 17% intraday, and analysts were talking about oil potentially retesting about $100 per barrel.
That magnitude of a single-day move matters. It pushed traders into large producers and energy exchange-traded funds, and also reignited merger chatter. Think the reported roughly $58 billion tie-up between Devon and Coterra, and appraisal moves at Talos.
Wow, big move. Switching gears, the other big force was the tech and AI wave coming out of Mobile World Congress and related announcements. Qualcomm launched a 3-nanometer Wear Elite chip, and Alibaba released this big open-weight model, Qwen 3.5. Those things matter for semi and hardware demand.
Right. And I mean, when you step back and look at this, the combination of device rollouts and large model releases creates a classic CapEx demand story for chips, cloud, and infrastructure. Amazon headlines about a possible $50 billion level of investment tied to OpenAI also fed that narrative.
So tech got a lift tied to future spending. Energy got a lift from an immediate supply shock. How did that translate into sector winners and losers?
Well, energy was the clear outperformer, followed by pockets of technology, especially hardware suppliers and semiconductor names. Utilities saw a bid too, as investors liked the inflation-hedged, yield plus CapEx story tied to grid upgrades.
And the losers?
Finance and banking underperformed. Litigation headlines and the inflationary costs from higher energy were right in their face. Healthcare was mixed and trended lower on regulatory and clinical uncertainty. Cannabis had state-level positives, but was held back by enforcement and recalls, especially in places like New York.
Yeah, that tracks. Not a great day for headline-sensitive sectors.
Exactly. Those sectors are just more binary. One regulatory decision or trial update can swing a stock a lot. That makes them event-driven in the near term.
Give me a couple of specifics that mattered today. What single-day moves were most significant?
The diesel uptick, about 17%, was the biggest market-moving number. That fed through to transport costs and inflation expectations. Then you had the Amazon and OpenAI coverage, about $50 billion of potential investment, which highlighted the arms race for compute and cloud. Qualcomm's 3-nanometer announcement and Alibaba's Qwen 3.5 model reinforced the AI CapEx story. Bitcoin also rallied on short covering and some institutional accumulation, though macro volatility still made crypto choppy.
Okay, so investors were rotating into cyclical, capital-intensive, and AI-exposed names in the near term, while banks, healthcare, and cannabis were trading cautiously. I want to dig into correlations. How did energy moves affect other parts of the market?
Geopolitical risk right now underwrites market direction. When energy jumps, you typically see producers and equipment suppliers outperform, while airlines, certain consumer names, and rate-sensitive sectors struggle. It also feeds into inflation dynamics, which can alter the central bank path and squeeze bank margins indirectly.
So higher energy can be a double play. Boost for producers, but a tax on consumption.
And the CapEx story from AI is interesting because it creates demand for semiconductors, cloud services, and for the network and grid upgrades that utilities and telecom equipment suppliers need to support new data centers and increased electrification.
Nokia flagged massive network investment needs today. That ties back to the same CapEx cycle, right?
Exactly. If you buy the thesis that AI drives device and data center growth, then you also buy more spending on networks, power delivery, and cooling. That benefits industrials and certain materials names over a multi-year runway.
Short reaction? Not what anyone expected.
Yeah, I was a bit surprised by how tightly linked those themes were in one session.
Let's talk about financials for a second. You mentioned litigation and headline risk. Any nuance there?
There always is. Some banks showed positive structural moves, like one firm getting an FDIC approval for an industrial bank charter, and another pushing its national trust strategy. But those positives were outweighed by legal headlines and the cost impact of higher energy. Rising oil and diesel raise operating expenses for many clients and pressure margins in some lending books.
So selective stock picking within banks makes sense. High-quality franchises with diversified fee streams should fare better.
Yes, be picky. And consider hedges if you own bank-heavy exposures.
Healthcare was another weak spot. What drove the caution there?
Regulatory scrutiny hit a payor and a biotech. That added headline risk. When you combine audits, Medicaid cuts at state levels, and binary trial outcomes, you get extra volatility. So the smart money treats those names as event-driven trades, rather than buy-and-hold core positions.
Got it. And cannabis?
Mixed. State legalization news helped sentiment in places, but local enforcement and product recalls tempered enthusiasm. This remains a policy and compliance story, more than a pure growth story for now.
Short reactions. Right.
Right. And the other thing is that consumer and real estate were more stable. Retailers posted some execution wins. Revolve reported about 10.4% sales growth. Macy's had anniversary programming. Target made merchandising shifts. But rising logistics and consumer wallet pressure kept the tone cautious.
Real estate had pockets of leasing momentum and financing activity, but mortgage rate uncertainty and office commentary kept other parts volatile?
Yes, multifamily and logistics looked better than office. If you were picking places within real estate, quality, leasing strength, and financing access mattered.
All right, Kate, let's move into the practical stuff. For investors listening, what were the actionable insights you came away with today?
Tactically overweight energy, but hedge your timing. The supply shock offers a clear, short-term lift to producers and service names. Options can capture upside while protecting against a rapid diplomatic resolution. For technology and semiconductors, favor AI CapEx beneficiaries, semis, cloud infrastructure, and select hardware suppliers. For utilities and telecom equipment, consider longer-duration defensive exposure tied to grid and network upgrades.
And what about financials, healthcare, and cannabis specifically?
For financials, be selective and defensive. Favor high-quality franchises with diversified fee businesses, and consider downside protection on bank-heavy exposures. In healthcare and cannabis, trade event risk and avoid big concentrated longs into regulatory or trial outcomes. Prefer diversified providers, health AI infrastructure names, and cannabis companies with strong compliance and balance sheets.
Crypto?
Manage volatility. Given increasing institutional activity, firms adding Bitcoin to balance sheets and governance wins at projects like Aave, dollar cost averaging makes sense, and leverage should be avoided.
And on real estate and consumer?
Pick quality over yield chase. Favor logistics. Industrial and core multifamily and retailers with pricing power or productivity gains from AI and automation.
Quick reality check. What could change the story rapidly?
Diplomacy. If the Middle East situation escalates, commodities and inflation expectations will move higher, and the rotation into energy and CapEx stocks would deepen. If it eases, the energy rally could reverse quickly. Also watch inflation prints and central bank commentary. A hot CPI or PPI would stiffen hawkish expectations and pressure rate-sensitive sectors. Regulatory rulings in healthcare, cannabis, and bank litigation can reprice names in a hurry. And finally, if AI monetization stalls or regulatory pushback arrives, that tech CapEx trade could lose steam.
So risk management matters a lot right now. Any last-minute tactical ideas before we wrap?
Keep positions sized for event risk. Use option structures around energy names. Favor high-quality balance sheet companies in policy-vulnerable sectors. And if you want tech exposure, bias toward names with clear AI CapEx revenue paths or cloud infrastructure revenue.
Key takeaways then, quickly. 1. Energy supply shocks dominated today and pushed prices sharply higher. 2. AI and device announcements supported the CapEx rotation into semiconductors, cloud, and hardware suppliers. 3. Policy and legal headlines penalized banks, healthcare, and cannabis, creating idiosyncratic, event-driven risk. 4. Utilities and network-related CapEx names acted as a defensive way to get exposure to the broader CapEx cycle.
And 5. Manage sizing and hedges. Diplomatic and regulatory developments can flip this tape quickly.
Honestly, I was a bit surprised by how the two forces, geopolitics and AI, interacted in one trading day. It really created a split market.
Yeah, that interaction is the story to watch. It makes for a volatile but tradable environment if you respect the risks.
Thanks, Kate. Great context. And listeners, if you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly through the Q&A feature, and we'll answer live. For more market analysis and insights, visit stockalpha.ai. That's stockalpha.ai.
Thanks, everybody. We'll be watching oil and diesel prices, CPI and producer inflation prints, Mobile World Congress follow-through, and any regulatory headlines in the next few weeks. Stay safe out there.
Thanks for tuning into Alpha Recap. We'll catch you next time.